Well, just as expected, the Bank of Canada did another rate increase this last Wednesday. And if you want to hear my 2 cents on why this will not make the Toronto real estate market crash and what industry experts are forecasting as the future of interest rates, then keep on watching. Before we get started, I'm Stephanie Nause with the Homeplicity Realty Group here at Keller Williams, and I am passionate about helping our clients build and develop wealth through real estate. If you're interested in tips on buying a home, selling a home, or investing in Toronto real estate, I hope you'll consider subscribing to our channel. If you enjoy this kind of content, go ahead and give us a like, and I'd like to hear your thoughts. Do you think that there's going to be more interest rate hikes? Go ahead and comment down below. All right, so let's talk about where the general consensus from a lot of the industry leaders in the mortgage industry seems to be that interest rates can only go so high. And what's different between now and the 80s and 90s when we saw rates surge and increase into the double digits is that Canadians are still carrying a lot of household debt. So even a 0.25% rate increase has 5 times more impact, even after everything's been adjusted for inflation, because our debt ratios are so high, with mortgages accounting for the largest portion of the debt. For this reason, the Bank of Canada is going to have a lot of pressure to keep interest rates relatively low. And there is talk that there will be one more interest rate hike before the end of the year. So we'll have to wait and see. And then hopefully at that point, it'll start to hold steady and maybe even taper off a little bit coming into the middle of 2023. Maybe we'll see rates come down. And from a pricing perspective, each time there's been an increase, we've seen prices soften up by a few percent, and I expect that we'll probably see this similar scenario follow through here. But there are 3 reasons why I don't think that we're going to continue to see major price corrections. The first thing to address in Toronto is the lack of inventory. The Toronto Real Estate Board came out with their statistics for September of 2022, and what it showed was the lowest number of listings to come on the market since September of 2002. So the lowest number of new listings to come on the market in almost 20 years. Why is that important? Because if we don't have that dramatic increase in inventory, then we can't see a housing bubble burst. So we're definitely not seeing people panicking and flooding the market with listing inventory. In fact, we're seeing the opposite, which is people just holding firm and staying in their existing properties. And for that reason, no housing bubble. The second reason that I don't think we're going to see a major price increase is that millennials and Gen Z account for almost 50% of our population right now. And the National Association of Realtors, NAR, came out with some statistics and said that 30% of all the home sales happening right now are happening from first-time buyers. And that's exactly the demographic that we were just talking about. You might think that they're not going to qualify with the new interest rate hikes, but guess what? Their parents have been helping them out and they'll continue to do so, and they still have lots of equity in their property. The third reason that we're not going to see major price increases is that people just don't have to sell. We're not in a situation with subprime mortgage meltdowns like we saw in 2008 in the States. Our Canadian lending criteria is very regulated, and because of that, the chance that homeowners are going to default is actually very low. And what we're seeing is that the decrease that we've seen in pricing is just off what happened at the peak of the market. So we're talking about from the beginning of this year, mid-February to now, that's where the decrease has happened. And even if people just bought their house at the beginning of this year, they were qualified based on the stress test. They probably locked in for their new mortgage rate for the next 3 to 5 years, and they're not likely to sell for the next 3 to 5 years. And like I said, with our very strict regulations, we're not likely to see people defaulting. And for that reason, we won't see those fire sale prices. People will just continue living and maintaining the existing home that they're in. So those are my thoughts. What do you think? Do you think that we're going to see further price decreases? Is there going to be more interest rate hikes? Go ahead and comment down below. I'd love to hear your thoughts. And if you've made it to the end of the video, thank you so much for watching. If you love this content, I hope you'll consider subscribing and give the video a like. You can follow us at Homeplicity Realty on Instagram and Facebook for more content that we don't post on YouTube. And if you are one of those millennials or Gen Z first-time buyers, these rate increases and the price softening has created some great opportunities, and we would love to help you get into a new home. So feel free to reach out and we can have a discussion about what your custom home ownership plan would look like. Until next time, bye. I'll see you next week.